Hello and welcome back to Game of Trades, your number one channel for videos on the stock market and cryptocurrencies. In this video, we're going to talk about this stock market rally that we've had since October of 2022 and the fact that dumb money is currently piling in on this move right here. We have the most amount of dumb money in the market since August of 2022. And before that, it was around November of 2021, of course, right before the big top in the market that led then to a bear market throughout 2022. So we're going to look at this indicator in this video and understand what it's telling us right now and whether or not we should be paying attention to this signal as a contrarian signal against dumb money, just like it was right here in August of 2022 and right here in November of 21. That's exactly what we're going to talk about in this video. Make sure to subscribe if you're new here and you're interested in seeing these videos. We post these types of videos multiple times a week, looking at the markets, looking at indicators that can help us understand what is happening in the markets. I'm very excited to be here and have the privilege to show you guys what I know about the market. Now, without further ado, let's get right into it. Now, first, I wanted to show you this chart as a quick side note to take a look at what's happening in global markets, and this is the country breadth. So this is really showing you how stocks are behaving around the world, not just in the US, and the percentage of those stocks that are above their 200-day moving average, and you have this indicator that oscillates up and down. When it's very low, most stocks are trending down. When it's very high, most stocks are trending up, and you can see what happened very recently. We had this thrust here between 0 and around 90%, and that's called a breadth thrust, something we haven't seen on this indicator since 2020, right here, where you had a breadth thrust after COVID when most central banks around the world stepped in with very easy money, propping up the stock market to incredible valuations and triggering a V-shaped recovery right here during the pandemic when the entire world was basically shut down. The stocks were rallying in a K-shaped recovery. Now you can very quickly see here we had one breadth thrust right there in 2019. We also had one right here in 2016. You also had one right here in 2012. Then of course in the recovery of 2009 right here. And then in 2003 right here. So you can see just eyeballing this that a lot of these thrusts occur at the beginning of sustained rallies. You didn't have one of these during the 2008 period. Now, if we look at this data very objectively and look at how many times we've seen this indicator go from 0 to 90% in less than 50 days, which is what we were just talking about here, and actually what just happened here over the past few months. And you can see the dotted lines here correspond to similar signals throughout history where we've seen that happen on stocks around the world. Now, of course, you can add your bias here that inflation is a lot higher now than in most of these episodes, that the Fed is no longer the market's friend relative to 2009, 2003, 1990, where the Fed was easing aggressively. But objectively, you can see based on history, if you don't want to have a bias, if you just want to look at the data, this is a pretty constructive signal. And in fact, if you are a member at gameoftrades.net, you were able to take advantage of this strength in global markets when we added EWGS, so German small caps, to the model portfolio back in November. This ETF is up a staggering 30% since its inclusion in the model portfolio. That's really what our service is all about at Game of Trades, to give you these macro trades that are going to outperform over the next few months, give you the specific levels, the targets that we have, the allocation that we're looking for, everything that an investor needs to have to make the right decisions. Make sure to sign up to the free trial if this is a service that you think you could take advantage of. Now let's get back to the dumb money confidence that is breaking out here as we had this rally. It was kind of a two-step staircase rally here so far that we've had since October of 2022, a brief pullback throughout the month of December, and then a rally in January, and now we have all the dumb money in the market. Is this the moment to be exiting? Now let's first think about what dumb money is. One quick example of what dumb money can look like are the small speculators. They often go with the trend, meaning they're typically all in at the top. You can see here small speculators. Towards the end of 2021, it's quite interesting. They were betting long right here in December of 2021, right before the big drop in the market. And you can see right here in September of 2022, right as the market was bottoming, making its big bottom here, look at what small speculators were doing. they were betting short on the market like never before. So pretty much the ideal contrarian signal, just like it was right here during the pandemic. Small speculators were betting against the market right here in May of 2020, right here, right as the market was about to go on one of its largest bull run. So you can see here on this rally, indeed, we are seeing dumb money, so small speculators come back into the market. Now, objectively, you're not at extreme levels that you typically see near the top of markets, just like you had in 2021. In fact, we're still below that green line here. So this indicator, at least, is showing that there's still quite a lot of fear amongst these speculators. But you can also see that the put call ratio, you can see right here, the put call ratio was extremely elevated right there. You can see here, right here, extremely elevated put call ratio as the market was making this short-term bottom, and then we had a rally, and you can see during this rally put call ratio completely collapsed. People were either getting squeezed out of their puts or going all in on calls, thinking that the markets were going to skyrocket. Now that doesn't mean that the market can't rally. You can see here you had a very similar reading in October of 2022 that was indeed followed by more upside in the market. August, right here, you had a similar reading at the very top. March, you had a very similar reading at the very top. And November, you can see here, right there, similar reading at the very top. So this is what is driving that dumb money indicator. So if you believe we're still in a bear market right now, if you believe that we still have more downside to go on the SP 500, well, now would be the time to shine, because dumb money is getting excited about upside once more. Now, the next question is, does that necessarily guarantee that there's going to be downside right now? That's the next question I want to answer in this video. Let's get back to this indicator of dumb money. You can see again, right? Let me quickly remind you, August 2022, November 2021. So beautiful indicator throughout this bear market. So again, flashing that same signal that we've had throughout this year. So this is where bears ideally want to double down and place their short bets on the market. But let's zoom out, and you can see here that there are periods during sustained uptrends where dumb money can stay above that red line, which is where we currently are, but it can stay above the red line for sustained periods of time. You can see that was the case right here throughout 2021. You can see here in 2019 that remained the case almost till 2020 with brief dips, of course, but the market was trending higher throughout this period. And then, of course, you had several moments throughout the bull run where dumb money spiked above that red line. Now, of course, in a lot of these cases, you had short-term consolidation, short-term corrections in the market. You can see here spike, consolidation, spike, consolidation. But you look at the behavior during a bear market throughout, for example, the 2000 bear market, well, these dumb money spikes here, every time it went above the red line, look at what happens to the market. That's a beautiful top right there. Here again, you can see here a spike in the dumb money in December of 2001. Look at where the market is. As you have that spike, it's topping out and it begins to roll over and plunge down into the next leg of the bear market. In the months ahead, again, you had another one here in February of 2001. Spike above the red line and a peak in the market. So during a bear market like the 2000 bear market, that was a very prolonged bear market where the markets just grinded lower and lower for a period of 3 years. In that type of environment, dumb money spiking is a sell signal. So I've tried to give you the data as objectively as possible, give you the education so you can form your own opinion on what this development means for the market today, what this actually means. Now, we still think there's some room for optimism that dumb money could potentially be right for another couple of months. But ultimately, we're heading into a downturn. Ultimately, the depth of the yield curve inversion does suggest that we are heading into a deep contraction in earnings later in 2023. That you are going to see the unemployment rate rise as you have the yield curve steepen and you're heading into a recession. People lose their jobs, they cut their spending. S&P 500 companies do worse in that type of period. We saw that in the 2000 bear market. We saw that in the 2007 bear market. So although we could potentially see some more upside in the near term as the market gets excited about inflation coming down, later in 2023, that's going to be very likely a different story. We posted quite a few macro notes on this subject regarding the timing of all this and how bad the recession is likely going to be in 2023 and probably 2024. These are quick notes that you can read in around 5 minutes and that really give you the context behind our convictions in the market. So I hope you guys did enjoy this video. If you did, make sure to click on the like button down below and subscribe to the channel if you haven't already. Now, in the meantime, I wish you good luck on your trading and see you next time.